This is Scott Becker with the Becker Private Equity and Business Podcast. Thrilled today to visit with you and talk about private equity. And here's the discussion today. KKR and Carlyle Group, as exits get harder, the big funds move towards fee income. So one of the things that's been reported recently, both these funds, KKR and Carlyle, reported earnings recently, and the earnings were strong, but the market didn't react well to the earnings. And that's because at the end of the day, both companies showed great fee income, but really having trouble getting the profits because of delayed exits and exits that are not at the profitability and the gains they'd like. Moreover, recently saw KKR announce that they're doing more and more with the long-term holdings group. They're investing another $1.1 billion in three companies that are in the long-term holdings group. The long-term holdings group is more like the Berkshire model, the family office model, less the buy, build, and flip model. And at the end of the day, the core business of private equity forever has been this buy, build, flip model. But now you see this gravitation towards buy and hold for the long run, towards essentially, the things like more and more fee income. And the challenge with that, the real challenge with that is private equity fund companies have commanded crazy multiples compared to asset managers and banks and credit institutions and others that are driven by fees versus profits. And so we'll see if ultimately this has a real impact on the sort of multiples that private equity funds command if they're no longer able to as actively buy, build, sell, and they become more like buy and hold. They'll still do fine, but they might not have the outsized valuations they've enjoyed for the last few years, at least in terms of Blackstone, KKR, Carlyle, and more. In any event, that's what we're talking about today. Thank you for listening to the Becker Private Equity and Business Podcast. We'll be back with you a little bit later with a short podcast on a few healthcare trends we're watching closely. Thank you for listening. Thank you very much.